Welcome to today's technical analysis video. We're going to look at palladium, which is a precious metal on the periodic table of elements used mainly for catalytic converters. We're not going to get into fundamentals. If you're interested in palladium, do any research that is required. This is mainly going to be chart analysis. The information given can work for pretty much any chart. We're going to go through candlestick charts and just go through different strategies and trying to read them to determine how to play the market. The data comes from lppm.org.uk. It is the London Bullion Exchange for platinum and palladium. You can get the data there from 1990, and that's where we're going to start, is in 1990 first quarter. This is quarterly candle charts, and we're going to go on a tick-by-tick basis. With one candle, you really can't determine too much, two or even three. Well, what we can determine so far is that it's extremely volatile. 3/4 of 1990, from April to the end of the year, the market went from close to 130 down to a bit above 80, which is really a gain of over 35% to the downside. So the early signs is that it's volatile. That's really all we can say right now, unless you had earlier data. And there's a time consolidation on three waves lower. It's now starting to bring back a little rally. It's tough to say if it's for real or not because it could retrace 38.2 or 61.8% from this high to this low. And what that means is the difference of the, so 38.2% is usually upwards here, 61 up to about here. And we're moving forward and it comes back down. So there's a little bit of a concern for it to potentially go lower. We're now seeing how 80 is a big test level. It's now getting massive. It's huge because look at all the tests we've had of that level now. And there's a breakout towards that candle and another part stating that we've really had 61.8% here. So it looks like it wants to break through it. You might want to see it, or you might prefer to see a consolidation back to this area here. And really that doesn't happen. You have volatility movements from the candle showing that it's moving pretty well. It's now got up close to 120, and it's tough to say that this is 61.8% because we don't know any information from before then. But we see how it just had a big breakout here, and so the benefit of the doubt's towards the buyers. And if you look at the volatility movement, that's about a 30 point move or $30 move. That's roughly well over 20%, and it's really consolidating through time and through price. It's had some wild movements and seen it go from 115 to 145. That's about 30%. So the volatility is massive. This isn't as volatile, but it's correcting very nicely. It looks like it's trying to establish a range, and that's now at the top part of this range, and it's just broken through. So it's had a nice consolidation for the next gain. It can still continue to go higher as long as there's people willing to buy and a lack of sellers, which is still the case. It's got up to 160, and it's now having some nice little gains. And look at the higher lows. 1, 2, 3, 4, 5, 6 consecutive higher lows within the candles. Or is it even higher than that? No. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 higher lows from this bottom. So the buyer's in full control. You can make that 12 higher lows. It's consolidating back towards this previous resistance there, and it's now broke below. So the question is, are you going to find support in here, which would be roughly the 38.2% area, and it's now had three waves lower. Now, the last time there was three waves lower, it bounced. We'll see if that's the case here. It's looking to find some support roughly around that 126 area, consolidating, and it just broke below. So you had the 3-bar consolidation, which turned out to be a bear flag, and it's now creeping lower. Now, it's not much of a move in here, which shows that the buyers and sellers are little unsure. If the buyers or the sellers are done, that usually means a nice snapback rally, and that's exactly what the case is in here. So what you'd want to hold is 61.8% from this low to this high throughout this rally. And as the highs increase, then the 61.8% numbers would also increase, and there's a parabolic breakout showing that we had this be nothing more than a retracement during this big rally. And the movements from like 150 to like 240, that's about 90 points. That's quite big, over 50%. And high volatile movements, but correcting back and forth now. Hopefully it can find this, if you're long that is, find support at this resistance here. And it's it's staying within a wedge pattern. So you want to be on high alert for a breakout or breakdown, but it could still continue consolidating, and there's a big breakout. And we've already figured out after just about close to 8, 9 years or so, that it's very volatile. And logarithmic charts work out better in my opinion. So I'm going to switch this to logarithmic, and there's a switch. And the logarithmic means it works within percentage gains, as this means the size of each candle will represent which is a bigger move than the previous ones, and these moves are bigger than they were back here. So the volatility, which was big back then, is now increasing. Another bigger gain, and the market's just going parabolic right now. And nothing wrong with some consolidating. Give the market some energy, some breathing room for another big move higher. And that's looking fairly strong. That's looking fairly strong. And another consolidation. But what's interesting here is we had a consolidation roughly between the 279 and whatever this number around 330 is. If it can find support at this resistance, that would be strong. And that's exactly what's happening. And there's a breakout up to 442. Buyers in full control. Buyers still in full control of this market. It's consolidating nicely. It's getting really parabolic. The parabolicness is still continuing, and the parabolicness is huge. It's now pretty much around 1,000. And look at this. I mean, it was down to 70. This is gains of roughly over 1,000%. If you were playing these breakouts, you need strategies for profit taking. And I'm not saying it because I know this is going to be a significant top for a decent period, but markets can do these major corrections. Now, just like we've seen before here, which is definitely shrink in size in comparison to what it looked like before, this could be nothing more than a correction within this rally. We're at this resistance point, and you can say, okay, it's looking to break out. If you want to play now, you really need to look at this on a shorter term time frame, maybe the monthly or the weekly charts, to see, okay, is there any signs that it's looking to break out? Because right now it is consolidating its three-candle push lower with less volatility, which is fine. And now the sudden push lower, testing the support level. And there's a dangerous candle that is very bearish, because what happened within this downtrend is it rallied up and then it closed pretty much where it started the candle off. And there's the bearish sentiment. You'd be thinking, okay, we're definitely going to the support level here. And there we are. We're now there. So would you buy at this level? Well, if you do, have a risk-reward strategy in place, because if you're buying on dips, that's what you would call a dip. And there was even more down towards this dip. Still very, very bearish. And you might be saying, well, I know how the currency's made now. Why is the market going lower? Well, how many people understand how the currency's made? You can't find this information out. You don't. I mean, if you know, you were a genius to figure out that the currency was created in its manner, and based on it, that almost anything should go up in price. And you see a nice consolidation candle trying to move higher, and there's a breakout from this bottom point. Now what's key is to hold 61.8% from this low to whatever the highs happen to be. You have a new higher high, even 1, 2, 3, 4 consecutive higher lows right now. If it can find support at this big area, then we can test the 61.8% from this high to this low. And though volatile moves, showing a lot of indecision, and now we're back down to the support level. This, if this breaks below, we're making new lows, basically. Consolidation, and this is pretty big support now, roughly around the 180 area. It's even bigger. And there's the breakout. Nice little breakout. And it's now showing me what I consider to be a double bottom. And that is, you establish a low from a downtrend, which has happened here. You go up some amount, which is some amount here. Then you go back down fairly close to the last bottom. We had that big consolidation at 180. And then you go back to that previous resistance. So there's the double bottom. What I like to see when this happens is either a time consolidation and wait for a breakout, or break out and then come back to some key support levels. And it looks possibly now like it wants to consolidate through time. And this is good. And you're getting so many different opportunities. It's been about a year. And the higher lows, the unvolatile movements, a lot of indecision, sellers not wanting to sell at these levels like they did before. It's now having it's this little resistance now support. You've had years, many quarters to get in on this breakout. It was such an obvious breakout, and it just happened to do so. Now we're getting to that 61.1% area from this high and this low, and a nice higher low. There's a lot of bullish sentiment, and it just crashed. Why? Well, this is Q4 2008, and that's when we've seen everything crash. The stock market, gold, silver, and sometimes you might want to mix fundamentals with technicals. Well, technically speaking, you can put fundamentals together. Technically, the market was brought down. Why? Technically, it was because of all of the panic within the markets and people just selling whatever they had while we had bailouts starting, and thus inflation, and usually prices go up. So that's where you can state, well, it's got to bottom at some point. If you start buying, I'll keep buying as it keeps going lower, as long as I can afford to. And well, there's another stage where it went lower, and it's consolidating its breakdown. And look at this. We have a cup and handle formation here, or an inverted one, that is, which is bearish, because you have a big gain here and then a smaller one here. A breakdown would take us down to 40, and but still hasn't broken the neckline, and it's rallying pretty nicely. And actually, what we're seeing here is that it's taken out the 61.8% from this high and this low. And what that means is that if that's the case, then this selling would be a failed move. And from failed moves, oftentimes you would get fast moves in the opposite direction. The opposite direction from down is up. And thus, if it can hold the 260-ish or so area, we're in for a big gain. And, well, it's continuing to rally. It's consolidating nicely. This is extremely bullish, and there's a breakout, and that's where we stand at year ending 2010. Thus, yes, we could still like to see potential retracements through price, maybe down to 500 or so. But at the same point, these three candles in here showed consolidation. We've only had one breakout. We've seen before that in parabolic moves, they can keep going higher and higher and higher. And with that, the volatility will surge within it. And the volatility is massive because we were stating back at the start that these candles were so volatile. And they're tiny in comparison to all these others, and it is adjusted for logarithmic, meaning that percentage-wise, this was lower than what we're seeing today. So the big moves, yeah, they could very easily happen. And if we get up to this previous resistance and either consolidate it through time, even a small price movement, that could mean massive moves, upwards to 2,000, 3,000, 4,000 within this Palladium market. Based on what we've seen historically, we also look at how currency's created, how people are waking up to the fact, how this information, whether they get it through money masters, money as debt, zeitgeist, or hear it from John down the street who knows what's going on, people are waking up. And thank you for watching this, and I hope you found it enjoyable, entertaining, even educational, as that's really what the whole purpose of this was. Have yourself a magnificent 2011. Bye-bye.